Welcome back to another video, everyone. In this video, we are going to cover trading lingo. I'm going to break down certain important stock terms that everyone should be familiar with. So I'm going to break down some in this video, and the remaining I have added a downloadable file that you guys can download, and it goes over other terms. You guys should be very familiar with them because as we progress through this training, a lot of these terms are going to pop up. So I want you to understand what they are. And if you don't understand something, please go to the forum, comment, post your questions, and I will go over everything in the forum. So first and foremost, the first thing I want to break down is bulls and bears, right? So you guys are going to hear this term a lot, bulls or bears. As you guys hear this term, what does it mean? So bulls anticipate that prices will go up, bears anticipate that prices will go down. So you guys probably heard of bull market or bear market. Bull market is obviously when the market is increasing, stocks are going up. Bear market is when we are basically in a recession or the market or stocks are going down. So you're going to hear me say a few times, oh, bulls are in control or bears are in control. If bulls are in control, that means they are anticipating that the price will go up. And obviously, if bears are in control, they are anticipating that the price will go down. Next, we have something called dividend. A dividend is a portion of a company's earnings that is paid to shareholders. Every company does not pay out dividends. So some companies pay out dividends. So basically, the way dividends work is, let's say company A makes $100 a year. Right? If they make $100 a year, what company A does, and like I mentioned, not every company pays out dividends. What company A might do is they might say, you know what? We are going to pay out our profits to our shareholders. So they start paying their profits out to shareholders. You could be, if you own the share of the company, you are eligible for a dividend. You are eligible for a piece of the company's profits. Right? Once again, every company does not pay out dividends. Us as traders, we're not looking to collect dividends. We're looking to trade stocks. We're looking to buy low, sell high. Sell high, buy low. We're not really looking for dividends. If we are investing, then cool. That makes a lot of sense. But as traders, we care about buying low and maybe selling high. Okay. Next, we have something called the bid, spread, and ask. This is very, very important. I'm going to dive more in depth with this once we get to the order flow section, once we get to level 2 in time and sales, and once we get to how to buy or sell a stock. So the bid is the price at which a buyer will buy for. This is where buyers are stepping in. Someone might say, hey, I want to buy a stock at $10. That's the bid. Then we have the ask. The ask is the price at which a security is offered for a sale, also known as the offer. So basically, on the bid, someone might say, hey, I want to buy one share at $10. And the ask, someone might say, I want to sell my one share for $12. Right? Once again, I want to buy one share for 10. And this person might say, I want to sell my one share for 12. This person owns the share, so he or she's looking to sell. That's why they're on the ask. They are asking this price. This is what they want for their share. Now, next thing is spread. Spread is the difference between the bid price and the ask price. So in this situation, the spread is $2 because the buyer is at 10, the seller is at 12, right? So the bid, once again, represents where the buyers are. The ask represents where the sellers are. The spread is the difference between the bid and the ask price. Here's another example. Let's say the buyers are at $7.50, the sellers are at $9. That is going to give you a spread of $1.50 because that is the difference between the buy and sell order. Now, this plays a huge role and it's very important to focus on when we are executing trades, when we're getting in or out of stocks, right? This is important because us understanding the spread plays a huge role. Understanding if there's a wide spread, if there's a tight spread, if there are interested buyers, if there are interested sellers, this is a huge, huge critical thing that we need to focus on. And once we get to this topic, I will break this down further and I will break down on how to read this, what's a good spread, what's a bad spread. But just understanding this for now is all I want you to know, right? Now, if you guys take a look right here, this is something called level 2. Right here on level 2, right, you guys can see the bid, where the buyers are, the ask, where the sellers are. And then obviously the difference between each is the spread. We are able to see in the market where the potential buyers are. We are able to see where the potential sellers are. We can see this through something called level 2. And like I mentioned, I will break down level 2 in part 5. I'm going to dive into it, break down how to read it, what to look out for, and what are the important parts of it. So this is level 2 once again. Buyers and sellers, we can actually see where they are placing their orders. Next, we have something called liquidity. Liquidity measures how many buyers and sellers are present, which showcases if it's easier for transactions to take place or not. So basically, if there's a lot of liquidity, it is easier for you to buy or sell a stock. If there is low liquidity, it is very hard for you to buy or sell a stock because there's not a lot of buyers or sellers present. Right? If there's a lot of buyers or sellers present, it's easier for you to enter or exit a stock. So when you guys hear the term liquidity, it's very, very important because obviously we want to see stocks with high liquidity. If there's low liquidity, we have to be very careful because it becomes harder for us to enter or exit that position. Next, we have something called volatility. Volatility is the range of price change a security, such as a stock, experiences over a period of time. So if there's a lot of volatility, you might see a stock move up or down a lot. If there's low volatility, you might not see the stock make crazy moves up or down, right? So volatility is also a very important term. So when you guys hear it, that's what it means. High volatility means that the stock makes drastic moves up or down. Low volatility means that the stock doesn't really make crazy moves up or down. Now, the question people are asking is, do we want to trade high volatility? Do we want to trade low volatility? That depends on you. That depends on the trades you're taking on. That depends on your trading style, which we will go over. That depends on your risk tolerance and a lot of other factors. So I can't give you a direct answer on that, but just understanding what volatility means when that pops up, when I speak about it, and when I talk about it in different videos, you should have a solid idea that high volatility means that a stock is making crazy price fluctuations. Low volatility means the stock is not making crazy price fluctuations. And then the last one is volume. I will dive into volume because volume is a very, very important concept in trading. Right now, I'm just going to give you the overview so you kind of have an idea. Volume basically showcases the total number of shares traded. Traded meaning bought and sold, right? So let's say Mike buys 4 shares. If Mike buys 4 shares, someone needs to buy those shares from Mike. Let's say Bob sells his shares to Mike, right? If Mike wants to buy 4 shares, he has to buy them from someone. If Bob wants to sell his 4 shares, he has to sell them to someone. Once this order takes place, that is represented as volume. And in this situation, the volume is 4, right? Because Mike bought 4 shares, Bob sold 4 shares. So the total volume is 4, not 8. Volume represents the total number of shares traded, right? In here, the transaction happened between 4 shares. Mike bought Bob's shares, Bob got Mike's money. So money went here, the shares went here. That's what volume represents. And like I said, when we get to price action, I am going to dig in volume very, very aggressively because volume is a very, very important concept. Now, if you guys check down below in the downloadable section, there is a file. Please download that file, go through the terms. And if you guys, once again, have any questions about any of the terms or any other terms, go to the forum and please comment there and I will answer all your questions.